All right, good. All right, let's get started. First of all, there's risk involved in trading, and DTI really puts a focus on risk because you got to learn how to manage risk before you're going to be able to manage your success. Therefore, what we're going to talk about today is market timing. And market timing is very central to what we do. And if you can hear me okay, we'll just go to the next slide and kick it off. Okay, I noticed that YouTube hadn't changed yet. Is that going to be delayed or is it going to change with us?
Right. Remember, there's about a 15-second delay, Tom, with YouTube.
That's right. Thanks for reminding me. Okay, so all right. Now we have some people that came in, youtube.com/at TBuzzTNT is this channel that we're in. This is our inaugural, what I would call inaugural training day, we'll call it. Because I plan on doing more of these in here once we get the logistics and everything worked out. So I think that's good. Okay. Uh, Now, customer service live, this is something that we created to make sure you don't have the frustration I have sometimes when I'm trying to find out answers to simple questions. And you could go to www.dtitrader.com/help to do that. And, they'll be open from 10 to 1 each day. And, like, for example, if I'm talking about some video, for example, the level bets video, and you can't find it, go there and they'll tell you how to get there and what to do. Okay. So I think that's pretty good. So today is training day at DTI. I'm gonna keep everything limited if I can to what I would say you know, inside of 30 minutes. Let's talk about market timing techniques. Market timing techniques. I'm a market timer, and I've spent a lot of time over the years doing that. And I'll give you some techniques that will help you have better trades from the get-go rather than looking at the market and being in the market and saying, hey, what is going on? Now, to quote that famous philosopher, Jeff Smith, he said, the race never starts at the close, it starts at the open. We learned many years ago that the opening price is the key price when you're trying to think about whether you're trading or whether you're not. And we track the opens here at DTI. And in fact, when I'm doing studies or anything like that, I always go to the opening price because that to me is where it's cooking with gas, so to speak. We start off every year with the year open. And I can tell you inside the DTI software, inside the roadmap, we got that number readily available for any ticker that we're interested in. And that yearly open sort of determines whether you're in a bull market or bear market. Now, we take a screenshot every year after that first day because we have some key numbers there that will pay us over the course of a year when you get to October. And I keep it up on my wall. I think Jeff does. I think Jonathan does. All of us that have been around a long time really realize the importance. Notice we got the open price where things open. And just give you an idea. If you knew this one rule, Tesla, how would it affect you? It opened at 250 and you're trading below that. That would tell you you don't want to be long Tesla. And if you look at that, you pretty well can see that. Or, for example, if you look at the S&P 500 and we open at 4,800, okay, on the S&P 500 and you're up here at 52, 53, you ought to be thinking bullish. That's what those two numbers tell you here using the year open. And Wait till you get to October. It really becomes valuable in October. And here's another little insight that I'll share with you. If you have a stop, if you have a, not a stop, but if you have a reversal where a market goes from down to up, like gold did, if you look at gold, gold was down the first few weeks of January and then reversed and became a great trade this year after that correction was over. Now, bringing it in a little bit focused, we put a lot of emphasis on the monthly open. We have a lot of tools that keep track of that, of the monthly open. And the monthly open brings an opportunity for a stock to prove itself all over again. Connecting the year open to the month open really gives you that trend for that stock that you're trying to follow. Okay. And, but it's a pretty healthy approach if you learn to connect the dots between the yearly open and the monthly open. Now, once you get inside a month, you start having what we call weekly open. Notice what we're doing. We're making a progression. Longest period first. Now we're into the month. Every month it changes. That's the metrics that we follow. And that monthly open, like right now we're in May, tells us May is a pretty hot month so far. Then you get to the weekly open. This is how you start finding stocks, okay, that are set up to make you some money. And so you'll take the monthly open, the yearly open, the weekly open. Now you're above all three of those, okay? Then guess what? You've got you a trend. Does everybody follow along how we do this? Because this is very important to determine whether you should be long, short, or out. Okay? And it becomes very apparent when you follow these numbers like we do. So you go from the weekly open. What's the next step? The day open. Now you got to remember with the day open, there's two opens you got to pay attention to, one for equities and one for futures. Last night, the futures opened at 6 o'clock. We track it through Asia, we track it through Europe, and then we marry the two this morning at 9:30 Eastern when we get the daily open for stocks. And that's the beautiful thing about connecting the dots. Bigger picture, smaller picture, intraday. So now you've got the connected dots flowing through from the year to the month to the day. This is how you're going to keep on the right side of the market, folks. Because the next step is learning a little concept we created many years ago called reference bars. And these reference bars have certain times associated with them. They're 30-minute periods at the start of a major shift in the market. Let me take you through this. In the evening, when the futures open at 6 o'clock to 6:30, we watch that first reference bar. We call it RB1. And then in the middle of the night for most people, 4:30 to 5, you have Europe open. Notice we went from Asia in the early evening to Europe when we woke up in the morning. And then you track that all the way into 7 o'clock a.m. to 7:30, where we have what we call the RBX bar. Very important for determining trends in the market throughout the day. I'll give you a classic case. You can follow a stock that opened and then was higher than that 7 o'clock number, probably an early start on it going higher. That's where you find out how money is flowing by following this scenario. And then, of course, after you get through the 7 o'clock, you go to the 9:30 opening and do the same process over and over again. And I would say, even if you're not watching these numbers, always go back whatever time you start looking at the market and check out the current reference bars for that day. Roadmap does a great job keeping track of all this information so you don't have to be in front of a screen. And at a glance, you can tell whether or not you ought to be long, short, or out. Now, the big bar at 12 o'clock, 11:30 to 12, we call Genesis, and that is the close of Europe. And now you got the US on its own wind power, so to speak, at 12 o'clock. And you could get a good trend after Europe closes. Sometimes there's a follow through, sometimes there's a reversal, but watch that bar for early entry on afternoon trend. And then we get to the RB4, which is the 1:30 to 2. A lot of days you'll see me set my time I'm going to be with you about 2 o'clock because I want to see what RB4 did in relationship to those other reference bars. And then you follow it on through to the closing bell, which happens at 3:30 to 4. That gives you an early view, 3:30 to 4, on what Asia is going to look like. I've seen many days where that's a big, stronger than garlic market, and then you'll see Asia open up and the market go higher that evening. Now, any questions about connecting the dots following the market timing process up to this point? Let me ask that because this is the basis of everything that we're doing. Now, here's a reference bar white paper to teach you about maybe some further details into the reference bar concepts. I use it all the time. You should too. You wonder why my accuracy is so good? Because I do use it all the time. And that's what I do when I'm doing this to set up what I would say the trades of the day, so to speak. Okay. And I got tools inside the roadmap that allow me to set it up. That's the beautiful thing about this concept. Now, at the end of the day, you got to have a big picture. And that big picture starts out with what we call the seven sisters. We look at markets, our E-mini, NASDAQ, Dow trade around the globe. The DAX markets, the market we track for years, is Europe, tells you what's happening in Europe. And of course, you got gold, which is a key commodity, crude, which is a key commodity, and bonds, which is a futures contract that talks about interest rates. And you'll notice that year-to-date change on bonds is down, which means the bonds correctly told us what Powell was going to do. Everybody was talking about him lowering rates, but if you look at where we started in January, and now interest rates have gone higher. And that is out there. You can listen to all the talking heads you want, but you got the information right there in front of you if you follow the bond market and the big picture view. So let me stop for a second. Does everybody understand what I just covered? I think this is very key and important for your analysis of looking at the market. Okay? Pretty cool stuff. Notice we got laid out. Yearly open, May open, week open. Right now, we're trading above the week open. Market's trying to go higher. All right, next slide, please, when you get there. In summary, we have found over the years, and tracking the numbers around the globe helps you identify the prevailing trend. Way before Wall Street journals tell you, if you follow what I'm teaching you today, you will be ahead of the 8 ball trying to figure out what the market's going to do. It helps you get that trend, whether it's an up market or down market or whatever, by following this approach, okay? And the other advantage of the DTI method, it gives traders the actual numbers to make decisions. When you look at a chart, I've never seen a chartist that couldn't do an interpretation to fit their own bias. You know it and I know it, right? So with what we're doing, with what we're doing, we're giving you a look inside this market and you can make a decision opposed to numbers. That's why numbers are important. We've found using DTI method will help improve, this is the key, your accuracy rate, where you're not just flipping a coin, but also, and I just got to stop you, also, it helps lower your risk. The better, more accurate you are, the less you're risking on your standard setups. Now, that's what you're trying to do as a trader, always improving your batting average and your success rate. Now let's go to a live market and look at the current market and do some analysis based on what I just taught, where you can do the same thing. I'll ask questions, and if you can't answer the questions, type in here, I need to do more study, but these are some simple questions we need to know. First, I'll give you that we're up for the year, we're up for May. So we're going to look at the weekly open of the day, and he'll put the daily up there where we can look at that. And I'll say to Jonathan, Jonathan, where did the week open at? And he'll draw a line where we open the week at for the E-mini. Why the E-mini? Because it's S&P 500, and the S&P 500 is how you get on the right side of the market. So he puts a daily up there. And when you get that daily up there, you start seeing this thing looks pretty good. And he's going to put a line where we open the week at. Now, after opening the week, does everybody see how we're above where we open the week? So if I'm long something and wanting to take profits, I'm probably going to give it more latitude to make money, right? That's exactly what I'm going to do. And I'm going to do it in such a way that will give me that opportunity. Okay? And that's how you do it. Now let's put the week open on Mondays is the same as the daily open, but let's put up here, Jonathan, if you will, the 9:30 opening on the E-mini, the 9:30 open. Let's do that for everybody. Now, everybody looks at that reference bar. And Jonathan, where is that 9:30 opening at on the E-mini?
52.62.
All right. And we're at 52.51. So what does that tell you, Jonathan, after tracking these numbers? What does that tell you about the current market?
Well, they're taking a pause from going higher.
That's right. They're taking a pause. So you're not aggressively maybe putting on trades right now, okay? And that's what that's telling you based on market timing. Does everybody here see that point? Because you got to learn how to go from the big picture to the small picture and keep your hand off the mouse. That's what you're trying to do. Now, I follow the S&P. That's why you'll hear me talk about the S&P and TNT. You'll hear me talk about the S&P on my T-Buzz TV, or I start almost every live setting with the S&P because the S&P is going to keep me on the right side, what I can say, of history. Because if the S&P is above its monthly open, weekly open, daily open, and reference bar open, I got an upward market there, don't I? All right, so what we've tried to do is show you the steps. Now let me open it up for questions that you might have, okay? And you can type those into our YouTube channel, and I can read them and answer them, and we'll type the answers in there. So here's where if you got any questions, you can do that. Dave says, explain the bonds. Okay. What are bonds? Bonds are an obligation from some issuing authority. In the case we follow the Treasury bonds, the issuing authority is the United States government. Bonds are set up because there's an agreed upon contract that they're going to pay interest off the money that you loan the U.S. government. These are called Treasury bonds. I like to follow the 30-year maturity date because it really gives you a bigger picture. Okay. And because of that, uh, it tells me whether the short-term or long-term interest rates are moving. If interest rates go higher from the date that bond was issued, that bond's price is going to do what? It's going to go lower. It's an inverse relationship. And so if the bonds go lower, okay, that means their interest rates are being increased. Does everybody understand that concept? Dave, does that help explain it? All right. So another question that some people ask, Tom, what are the key numbers each week? Well, each week it starts out with that weekly open. The weekly open starts out and tells me whether I need to pay attention or not pay attention. And I think that that's how you can look at it, okay? Uh, Here's a great question. It says, how do you handle trading when the current price is above the daily and weekly open, but still below the monthly open? Well, what I do for stocks, my general rule, great question, by the way, for stocks, I won't trade them if they're below the monthly open. I keep it simple. Okay. And that's just what I do. Now, if I'm trading futures, I will use that weekly open because the futures is a contract that moves. For example, Jonathan, if you will, why don't you put the NASDAQ futures in there and let me show him something. And Jonathan, will you put a line where we opened at? There's one right there at the top, that blue line, right?
Yeah, that's the reference bar open this morning.
Yeah. Folks, do you see how the NASDAQ, looking at the NASDAQ today, the NASDAQ's bullish this year, NASDAQ's bullish this month. Do you see how the NASDAQ right now is trading higher, but it's not high enough? And Jonathan, what's the high of that bar, that opening price?
That high is 18,336.
Yeah, see, we're 18,306. I could trade the NASDAQ futures if we start going higher. Okay. And that's what I would do. Or I might look at the QQQ. Put the QQQ in there real quick. What's the high of the QQQ, Jonathan?
QQQ reference bar, I'm at a high of 444.09.
I can tell Jonathan right now, if the QQQ, if we get higher, and what was that number? 444.09?
Yep.
That's about 50, 60 cents from here. Then I could go buy a call option today if that happened. Why? Well, the market's bullish, and now the NASDAQ's bullish, translating into profits. See how that goes. All right, I want to wrap up and try to stay within my 30 minutes. This is our first inaugural. We're going to be back at 10:45 for our next subject. I noticed, Jonathan, And I think we really need to do the following. I think a lot of these people are the smartest people we have because they got here by going to the YouTube channel. I think that what we ought to do, and this is my thoughts, let's just test it out. In this little break, Jonathan, why don't you create what I would call a Zoom room, special Zoom room, and let me make a 1 minute video with the link, okay, where they could see it. Because I don't think a lot of people understood it the way you said it worked. 40, you know, we out of all the people, I bet people are trying to figure out how to get in here is my deal. Okay. So we'll give them a couple choices. Okay. We'll put the YouTube link, the YouTube links, I guess, being signed in, right? And the Zoom link that we use for the Zoom room, we could put that in there. In that 1 or 2 minute video we could post. Training day. All right,
Okay,
we'll
let's
be
cut the
back.
session. We'll be back at what, 11:15?
It's 11:15 when we're coming back.
Yep, 11:15.
Perfect. All right.